What's up everyone, my name is Bowie and in today's video I'm gonna explain you how the big boys manipulate the crypto market, what liquidity is and how you keep losing money with crypto. You ready? I'm ready. Let's go! Before we go further, we need to know that there are two groups of people who are trading the crypto market. First of all, we have the retail traders. And retail traders are just people like you and me who don't have an insane amount of money, but who just want to make some money with crypto. And then we have the institutions, also often referred as the market makers. And these are the boys with insane amount of money who are manipulating this market. Now, why is this important? Let's look at the chart. Let me ask you a question. Do you think that if I buy Bitcoin right now, that the price will go up? No, of course not. It will barely move. That's because we are retail traders. Even if I'm putting down 500k or even $1 million, it will barely move the price. We are not the ones that move the market. The market makers are the ones that move the market. They manipulate price to go from one point to another point. So without the market makers, aka the people with a lot of money, price of crypto will stay very boring. We need the market makers because they provide liquidity so we can buy and sell assets very easy. But remember, this is very important. The market makers are actually the ones that are trying to screw us over as many times as possible by liquidating our positions. Let's check on the chart and see what I'm talking about. What do you think will happen next? Well, most of you will say that they will buy at this point right here, because look at this. If price hits this point, it will likely go up again, because we've seen that in the past. Look, this hits this point and up. Again to this point and up. This is a very wrong way of thinking because everyone is doing the same. They wait for price to retrace to this area right here and they saw in the past, okay, it went up from there, so it will probably go up again. They buy long right here, hoping for price to go up, and they put their stop losses in this area underneath. So that way liquidity boxes are being created. Liquidity boxes are basically boxes where a lot of orders are being accumulated because they put the stop losses at the same area. And it happens the other way around too. From this point, you'll see that price constantly moves down over and over again. So what happens when price hits this point? Retail traders, they go short, hoping for price to go down. And by doing this, they put all their stop losses at the same area right above this point. So this is how the liquidity boxes are being created. Look at this. The liquidity boxes are below and above the swing highs and swing lows. So this is basically a box with a lot of orders, in this case stop losses from the retail traders. And so what price will usually do is basically take out this liquidity by going inside and maybe even below these boxes before going up again. This is the move of the market makers. They don't want you to expect the price. They want to screw you over as many times as possible because right now the market makers can fill up their big orders before reversing the price back up again. In order for someone to buy a crypto, we need one to sell. And in order for someone to sell a crypto, we need someone to buy the crypto. So because the retailers think price will go up, they put their stop losses right here, and their stop losses are basically the sell contracts. So for someone to sell, there needs someone to buy. So because there are a lot of orders right here, in this case stop losses, they can use these stop losses as sell contracts in order to buy. So if they hit these sell contracts, they can fill up their buy orders and they can reverse price back up again. And you need to understand this very well because this is one of the, if not the most important aspect of crypto trading, because the market makers move the market. They want to screw you over as many times as possible because you are the liquidity for the market makers. In the next videos, I will talk about support and resistance, supply and demand, fair value gaps, order blocks, volume levels. So make sure you hit the subscribe button and the bell because there's coming a lot of free education towards you. Let me know what you think in the comments. Have a beautiful rest of your day and I'll see you in the next videos. See you.